Welcome back. Now, December is famous for the 13th check, while March is synonymous with bonus payouts, especially for high-income earners. According to Standard Bank, the extra cash creates income spikes that influence savings, debt repayments, and travel. The organization's head of money management, Doret Jooste, joins us with some insight on how different income groups spend their bonuses. Doret, thanks so much for your time this afternoon. And as mentioned, it's bonus season for many high-income earners, and most bankers getting a little extra last week. I guess needed in this kind of economic environment, right?
Very much so. Good afternoon. It's nice to be here. I think especially bonuses are becoming more and more important for people, including 13th checks. If we look at how interest rates have risen since 2023, and we've seen only small increments in that interest rates coming down, we definitely need some extra money.
So talk to me about the kind of trends you've noticed when it comes to consumers' spending habits with their bonuses.
So what's very interesting is we actually looked at two groups and analyzed differences and similarities between two income groups. So the one is more middle income earners. So typically people earning between 8 and 25,000 Rand a month. So that low income tax rate bracket, almost like entry level. And the other group we analyzed is those earning more than 4 million Rand a year. So truly the start of the more wealthier client base. And what we saw here very interesting. So middle income people usually get their 13th check in December, but March is really the high season for high income earners getting that extra payout. If we look at what they spend on, middle income customers, very disciplined actually in terms of prioritizing necessities, so spending on groceries, transport, and paying off debt, which is critical for good money management. High income clients, very interestingly, spend more on travel plans. So although they travel mostly in December, they start planning in March, but also they start to invest more. So larger payouts going to investment houses. And these are some of the tips and the insights that we'd also like to help our middle income customers with in terms of how can we partner sooner with you so that you can plan on how you're going to spend that bonus and actually set you up for success.
And do you think the responsible spending from the lower to middle income earners has anything to do with when they get their 13th check? Because I think of, December, you're spending time with family, so obviously you'd want to buy more groceries. The school year is coming up, so you'd want to put money aside for school fees.
Definitely. And I think, this is such a good trend that we're seeing in terms of, planning around spending, planning for the new year. We know January is a very tough month for a lot of South Africans. So we do see this proactive nature starting to emerge and good habits being formed. I think we would like to assist customers more in terms of, stretching just that forward-looking planning to say, let's go from beyond just the month of January to say, okay, how do we help set you up for long-term success? For when your kids, for example, want to go study one day, how do you start taking small steps towards that today to help you in future?
And then how do we go about doing that, considering that, that rand is already being stretched already, and even with the bonus coming in, it is, making or going towards debt repayments or really important expenses?
Absolutely. So if you look at the bonus going towards debt repayments, a key, tip that we share with customers is approach it in a hybrid way. So why do I say hybrid? So it's always good to pay off high interest types of debts. If you think about credit cards or maybe clothing store accounts, usually attract high interest rates. So you want to get rid of that debt as soon as possible. But while you're doing that, start setting money aside for like an emergency savings, because what typically happen is we squash our debt, but in 2 weeks from now we need money again to buy something, and then we have to take on new debt. So if you approach it in a hybrid way and you start setting a small amount of money away just for the rainy day, it can help you build your resilience and actually have a safety net going forward. I think another brilliant way and very practically that we're helping our customers is that we've got financial advisors in 7 in every 10 of our branches nationwide. And we specifically put our financial advisors here to help clients in middle and emerging affluent type of income if they need assistance and professional advice. So we partner very closely with bankers so that our clients can actually get the type of professional advice and help with that long-term planning that they need.
All right. You talk about the higher income earners and their spending going mostly towards travel expenses as well, but most importantly going towards investment funds around March. What kind of investments are emerging as popular?
So it's really a very broad spectrum. And I mean, this just goes and reflecting that your financial plan is unique to you. And if you engage in financial planning, you can actually reach those goals that you want to. So we see actually payments going to insurance companies, which typically offer endowments, that type of investments. There's also unit trust. There's a lot of property investments also that we see. At the Standard Bank Group, we also offer like a lot of these things in-house. I think the crux of it is more to say, you know, where are you putting your money to help you actually achieve your long-term goals? And we see that wealthier clients are actively engaging in this. So even the payouts coming in March, a lot of it is from their companies, you know, in terms of like a bonus that we would traditionally know. But a lot of the payouts is also investment payouts, things like dividend payments that they receive. And what we see is that they tend to reinvest it. So it's how do we start earlier and help our clients earlier with that journey to actually start building a type of investment that they can later actually start drawing income from.
Are the differences you're seeing have anything to do with perhaps the saving culture in South Africa, which is pretty poor?
So in large terms, I mean, we know South Africa, especially if we compare it to some of the European countries, which traditionally have higher savings rates. I mean, we don't compare well, but I think when you zoom in on specific pockets of individuals, especially those, you know, older than 50, when retirement starts nearing, the reality of have you actually saved enough becomes very, very real. And we do see that clients start saving more when they start getting older. There is, however, a large portion of our market that's simply unable to save because they are living so close to the breadline. And a lot of our middle income individuals in South Africa actually support, you know, extended households, extended families. So it's really around how do we help those guys supporting other South Africans in terms of family and extended family to help get and build a robust safety net. And that is why things like an emergency savings is so important to start early on, even if you can just save small amounts. And that, if we can do that at scale, that will actually influence our savings culture going forward.
Doret, thanks so much for your time and sharing those insights. That was Standard Bank's Head of Money Management, Doret Jooste.